Now, time for the business news, and Aaron Heselhurst is here. Aaron.
Hello. Very busy day, and of course a big surprise indeed. That is because the French and German economies have started to grow once again. Now, that surprise news emerged this morning, and it certainly means that their recessions, the worst in post-war history, are now at an end. The economies of both countries unexpectedly grew by 0.3% in the second quarter of the year. And of course, the Eurozone as a whole saw economic activity shrink by just 0.1%, certainly much more than expected. Well, Colin Ellis is a European economist from Daiwa Securities. I asked him a little earlier why this news came as such a surprise.
I think on the German side, there was always a chance there would be a bit of a bounce after the massive 3.5% fall in output that we saw in the first quarter. And it was just a question of whether the inventory cycle, which was going to continue to drag on growth, would be offset by the other parts of the economy. That said, the industrial production data, which is the monthly stream of data we get that maps into production, has still been very weak. Production was still down almost 1% in Q2 in Germany. With France, the picture's a little bit different. In particular, the growth in Q2 was largely driven by a big contribution from net exports, which is a little bit odd because exports themselves actually rose by 1% on the quarter, whereas imports fell by 2.3%.
Sure. And just to make it, just to clarify to viewers out there, that when we see a big drop, when you mentioned that bounce, we tend to see a bigger bounce back, so to speak.
Well, there is always a chance when you see a sharp movement in any piece of economic data that there'll then be some kind of correction there. Because you're getting timing effects or things are just a little bit extreme in one quarter. And what we typically do is try and smooth through some of that volatility.
Okay, and the driving factors, you mentioned, exports, but the consumer spending not doing too bad, and also, I guess, the government stimulus package. I mean, how much did that play a part?
Well, the French economy, consumption has been rising for the last 4 quarters. They haven't had the retrenchment that we've had in the UK. The German economy saw consumer spending rise in Q1 and again in Q2. And it is true that these car scrappage schemes seem to have worked in encouraging people to bring forward some of their spending from the future.
Well, I need to ask you then, because we've got a car scrappage scheme here. We've spent billions. They've thrown billions into the system. What's the difference between them and us?
Well, fundamentally, it's 2 very different stories. In the Eurozone as a whole, and indeed in Germany, perhaps less so in France, the story is really one of a collapse in external demand. Exports falling, industrial sector being clobbered, and we're now seeing some signs of that maybe starting to stabilise. In the UK, the story is all about consumer retrenchment. We spent an awful lot of money for a very long time, and now households are busy rebuilding their balance sheets.
Yeah.
So I think it's natural that we haven't seen the same kind of strength in consumption in the UK.
And just briefly, going back to France and Germany, how durable is this growth? Is there a chance of a double-dip recession?
There's definitely a chance of a double dip. The stimulus packages have worked to bring forward some of that spending, but really Europe is still waiting for the rest of the world to recover and start buying its exports again.
Okay, let's hope there's no double dip. We don't like double dipping. Quick look at the markets. Of course, you can see European markets certainly like this news.